Welcome to the Black Phoenix Financial Podcast. Lee Kemp here for another week of financial education, as always with Ethan Cope. How are you this week, my friend?
Good, very good. Very excited to be with you guys today.
Excellent stuff. We thank everyone for joining us over the holiday period. This going out on what is New Year's Eve. So hope everyone's having a good day and down for getting a bit of financial education going on as well. So what are we talking about this week to start us off then, Ethan?
Well, we're actually going to be discussing the long-awaited topic of short selling.
Yes.
And I know that was something that Lee was talking about. And on the heels of our last show where we talked all about play and practice and how the conditioning in the market is very similar to a video game because it's not intelligence for the most part. Some of these things we have to learn for sure, but there's so much emotional conditioning. So learning short selling is super exciting because it's actually my favorite simulations to run. And if you take simulations seriously, it's exciting when you're winning, and you're like, oh man, when I'm losing, you're down in the dumps a little bit if you're taking it seriously. So short selling is the opposite side of volatility. We've been talking about going long for a long time, and that means buying with the idea of selling at a higher price, and the difference between the price you purchased at and then later on the price you sell at is the profit, the difference between the two. But on the opposite side of things, when a stock takes a plunge, there's a lot of other traders on the other side of that trade. And for our quick learners, our 5-minute segment, the idea that short selling is actually borrowing an equity at a high price, what we consider as a retail investor, a frothy or exuberant price level where it's high. And then after it's got that big discount or that price cut, you actually return that equity. And then so the difference between the price that you borrowed it at and then the price that you return it at is your profit, that distance there. So learning all about that, a lot of the same rules that we apply to going long are involved in short selling, except most traders, when they get into the market, they dream of that black swan event where they buy something and it goes straight up like a rocket, NASA style. But we know from our experience that being around for one of those events is highly unlikely, even if you wait patiently. And then making the most of them is even more unlikely. But in terms of short selling, stocks take the elevator down. They go down very, very quick. So if you reverse the equation, it can be very exciting to be in that event when it happens. So we're going to learn that in short selling. And if you go back in our first few episodes, we have a different we have a list of preferred reading, and one of them is actually the book entitled The Art of Short Selling. So that gives you a really good overview on how to assess companies. Fortunately for the simulation aspect of things, we are able to just learn technical analysis. It's almost like every trade that we make is made at market conditions. We don't really know much about the company. We don't really know much about the share structure, and we certainly don't know what's going on. We don't know anything about earnings or contract. So it helps to keep our mind free to concentrate specifically on the chart. So that's what we're going to do today. We're going to learn how to use our key levels and the personalities to now take some negative bets against charts. And then I have some negative ETFs for us to watch at the end of the show.
I'm really looking forward to this. You know, this has been on the table since day one about doing a bit of this. You said it's the most exciting bit. The bit for me, and I know we're only doing simulations, but like you said, there's a lot of opportunity to gain within this. But I guess because what you're doing is taking a chance that that stock is going to tumble and you can buy it back at a shorter price, is that your risk is kind of unlimited as well, which I suppose is a bit of where the excitement comes into this. So it's a much riskier strategy, but I've been really looking forward to doing this, giving it a go. For those watching a 5-minute video, hopefully that was a very good quick overview of short selling, the benefits of it as well. If you're on the longer form video, stick around. We're going to do some simulations. Hit it live. If you're just on the short video and you want to see some more, just click the next video. You'll see our full 30-minute overview of short selling. Don't forget, of course, check us out on social media. We are on Twitter at BP Financial Pod. Ethan himself, along with his live trading, is at T4A Phoenix. That is T4A PHENUX. Thank you very much.